Now, before this video gets started, make sure you guys check out my Discord. It's completely free. I'll leave a link in the description for it. What's up, traders? So in today's video, we're going to be talking about this amazing big upside potential stock named Citius Pharmaceuticals, ticker symbol CTXR. But before we talk about this stock, if you are new here, my name is Antonio, and I like to talk about stock options and high demand stocks. If you want to get updates on hot stocks that you should be watching, make sure to like and subscribe. And most importantly, turn on the notification bell so you never miss my uploads and updates on hot stocks. Anyways, let's get into today's video. But a disclaimer, I'm not a financial advisor, so do invest according to your own personal risk tolerance and after you've done your own research. So we're going to be talking about CTXR, and I don't give buy recommendations. I simply enjoy informing others about stocks that I believe have upside potential, and I show my research as to why I believe that. But ultimately, I simply inform you so that you can make your own interpretation on whether or not you should invest. But I also like to be transparent, so I show how much money I personally have invested into each company. With that being said, we can see here that I own 1,000 shares of Citius Pharmaceuticals at an average cost of $1.98. It was actually way lower than this, but I ended up buying more shares because that's how confident I am in this company. I'm currently up 20% or close to $400. Now, the risk reward of this stock is huge due to the fact that it's only a $2 penny stock. The risk would be a loss of $2 per share if the company were to ever go down to zero, and a gain of anything above that. So if this company ever hits double digits, that would be an insane return on investment. Now, what is Citius Pharma and what's some of its upcoming catalysts that it has? Well, that would be Mino-Lok. They do offer other products, but the main thing that we're going to be focusing on is Mino-Lok. So Mino-Lok product is an antibiotic lock solution used to treat patients with catheter related bloodstream infections, or CRBSIs, which are a very serious, especially in cancer patients receiving therapy through central venous catheters, or CVCs, and in hemodialysis patients where venous access presents a challenge. Now, what are CVCs? A CVC is a thin tube, but it's also much longer than a regular IV. It typically goes into a large vein in your arm or chest. When would I need one? The key with CVCs is that they can stay in for weeks or even years, depending on the type. That can make long-term treatment a lot easier. If you get needles or a regular IV over and over, they can damage your veins, plus constantly getting stuck with needles can take a toll on you. And if you get a lot of medicine through an IV, you might feel it burning every time it goes in. A CVC helps you avoid those problems. Now, the problem with that is that they can get infected. So as we can see here, all catheters can introduce bacteria into bloodstream. This can result in serious infections that can be fatal in up to 25% of the cases. So bam, we just got what this company is aiming to solve. So whenever you invest into a company, you want to make sure that they have something that they're trying to solve, a certain problem, and this is what they're trying to do. And currently they really don't have any direct competition, and this is a market that could open up around $1 billion of potential revenue. So that would be a huge catalyst for this company. Now, first, let's get into introduction to catheter related bloodstream infections. So central venous catheters, or CVCs, are life-saving vascular access ports in patients requiring long-term intravenous therapy. CVCs are used to administer fluids, blood products, nutritional solutions, and medication, as well as hemodynamic monitoring. While CVCs are important in treating many conditions, particularly in intensive care units, they pose a significant risk for device-related infections and are a leading cause of morbidity and mortality. Of the approximately 7 million CVCs used annually in the US, about 500,000 or 7% become infected, leading to serious life-threatening infections called catheter-related bloodstream infections, or CRBSIs. Now, we can see that this is the clinical definition. CRBSI is a clinical term used to categorize patients with an intravascular catheter who have a bacterial or fungal infection with at least one positive blood culture obtained from a peripheral vein. Clinical manifestations of infection, including fever, chills, and/or low blood pressure, and no apparent source for the bloodstream infection other than the catheter. So here we can see that colonization of a CVC by microbes on a patient's skin and from other external sources occur rapidly following device insertion. Biofilm may form when bacteria adhere to surfaces in moist environments by excreting a mixture of glue-like substances. A biofilm community can be formed by a single bacterial species, but more commonly consists of many species of bacteria and other microorganisms. So the standard of care in the management of CRBSIs consists of removing the infected CVC and replacing it with a new catheter at a different vascular access site. These procedures are costly, and the 15 to 20% of procedures are associated with significant morbidity. There are currently no approved therapies to salvage infected CVCs. So the fact that every time one gets infected, the only way that they can treat it is by removing it and then re-administrating it which also increases the chance of it being infected. So this would be something that Citius Pharmaceuticals is trying to solve. Now, if we look at the Minolock overview, we see that their Minolock product is an antibiotic lock solution used to treat patients with catheter-related bloodstream infections, which are very serious, especially in cancer patients receiving therapy through central venous catheters or CVCs, and in hemodialysis patients where venous access presents a challenge. So now some of the highlights that they have is that they address medical conditions that have unmet medical needs with cost-effective products. They have partnerships with a leading cancer center and support from medical thought leaders. In a phase 2b trial, the Minolock product demonstrated a 100% efficacy rate in salvaging colonized CVCs. The Minolock product had no significant adverse events compared to an 18% serious adverse event rate when infected CVCs were removed and replaced. FDA fast track with QIDP designation and patent protection until June 2024, formulation patent protection until November 2036, and they are currently in a phase 3 pivotal superiority trial. So now the Qualified Infectious Disease Product or QIDP designation was established as a part of the Generating Antibiotic Incentives Now GAIN Act, which was passed by the US Congress in July 2012 for the purpose of encouraging pharmaceutical companies to develop new antimicrobial drugs to treat serious and life-threatening infections. So now their Minolock product is intended to salvage the CVC, obviating the need to remove and replace catheter. This is a recognized unmet medical need. There are few alternatives to removing and replacing the CVC once it becomes infected. Studies show that the removal and reinsertion of a CVC have a 15 to 20% complication rate, including pneumothorax, misplacement, and arterial puncture. And their Minolock product contains a proprietary combination of minocycline, edetate, and ethyl alcohol, all of which act synergistically to break down bacterial biofilms, eradicate the bacteria, provide anti-clotting properties to maintain patency in CVCs, and salvage the indwelling catheter. The Minolock product is used in 2-hour locking cycles, allowing the CVC to be used for intended purposes for the remaining 22 hours each day. So this is an example of what biofilm accumulation looks like. This is how it looks like, or right here, this is the actual picture, and this is what it looks like after the use of Minolock, which removes almost all of it, all of the biofilm. Now, when you're trying to invest into a company, it's important that you look at who is leading the company, and in this case, we see that they have a very good, solid team that is leading them. So the chairman of the board is Leonard Mazur. Mr. Mazur is an accomplished entrepreneur and pharmaceutical industry executive with notable accomplishments in founding, building, and creating value and returns for investors. And he is the co-founder, vice chairman of Acromac Pharmaceuticals. Mr. Mazur is a member of the board trustees of Manor College and is a recipient of the Ellis Island Medal of Honor. Mr. Mazur received both his BA and MBA from Temple University and has served in the U.S. Marine Corps Reserves. So we also have the President and Chief Executive Officer. Mr. Holleback has extensive experience in managing and leading both large and emerging pharmaceutical and life science companies. So we can see that Mr. Holleback was the President of Roche Laboratories Incorporated, a major research-based pharmaceutical company from December 1998 to August 2001. Prior to that, he held sales and marketing positions at Roche during his 19-year tenure there, and this is the company. If we scroll down, we can also see that he received advanced business training from the Harvard Business School and the University of London, as well as advanced training in health economics from the University of York's Center for Health Economics. Now here is the FDA fast track that they received. A specialty pharmaceutical company focused on adjunctive cancer care and critical care drug products announced today that it received official notice from the U.S. Food and Drug Administration, FDA, that the investigational program for the Minolock is designated fast track. Minolock is a catheter lock solution that has entered phase 3 trials for an adjunctive treatment for the catheter-related bloodstream infection. Fast Track is a designation by the FDA of investigational drug to expedite review to facilitate development of drugs which treat a serious or life-threatening condition and fill an unmet medical need. A drug that receives Fast Track designation is eligible for the following: more frequent meetings with FDA to discuss the drug's development plan and ensure collection of appropriate data needed to support drug approval, more frequent written correspondence from FDA about the design of the clinical trials, priority review to shorten the FDA review process for a new drug drug from 10 months to 6 months, and rolling review, which means Citius can submit completed sections of its new drug application NDA for review by FDA rather than waiting until every section of the application is completed before the entire application can be reviewed. Now, if we look at their PowerPoint presentation, which was released this month, if we scroll down, we can see that here's the company overview. Minolog is in late phase 3 and its favorable review received for futility analysis by data monitoring committee and its favorable review for safety and efficacy analysis in September. We can also see that the large market needs for the CRBSI market estimated to be around or over $1.8 billion worldwide, because not only do they have a market in the United States where roughly around 500,000 catheters that are used, but it's a worldwide product. It can be sold worldwide, and there's more of a market worldwide. They also have, of course, the expert team that can help them execute. Here are some of the key things that the management team had, and here are some of the key scientific medical advisors from the company and the key cellular therapy advisors. So here is how their pipeline and progressive stages is as of current 2021. The Minolog is in phase 3, the hyliion is in phase 1, and the Warp is in preclinical, as well as the IMSC is also in preclinical. Here's an example of the CVC, and here's an example of the pathogenesis of CRBSI. Here's an example of the biofilm formation, where pathogens attach to the surface of the lumen in a central venous catheter and form colonies. Colonies grow and exude a fibrous-like glycocalyx that protects the organisms from antibiotics, even when shown to be sensitive in vitro. And here we can see the problem. CVCs are a lifeline for cancer patients. Of the 7 million CVCs used annually in the US, up to 472,000 become infected, leading to serious life-threatening infections called CRBSI/CLABSI. These infections are associated with 12 to 25% mortality and morbidity. Hospitals are penalized for reporting high infection rates, not to mention incur an attributable cost of $46,000 to $65,000 per episode. The SOC, or the standard of care, is a poor option for patients and hospitals. This is what they currently do. So the current standard of care is to remove and replace, a process known as R&R, the CVC. While treating with systemic antibiotics, catheter R&R causes physical and psychological symptoms in 57 to 67% of the patients. R&R is difficult for many patients due to unavailability of other accessible vascular sites and the need to maintain infusion therapy. Cost for just the R&R procedure is roughly $10,000, which is very expensive. Some of the complications with the CVC R&R, or the CVC remove and replace, would be that it's invasive and discomforting to patients, and the procedures are costly and are usually require additional hospital stay. And then there's complications due to infection, thrombosis, occlusion, and mechanical complications. Infectious complications are reported to occur in 5% to 26% of patients, mechanical complications in 5% to 19%, and thrombotic complications in 2% to 26%. And of course, here's the market opportunity that they have, as well as the patents and the description of them and the key creators of those patents. They also have regulatory protection and a competitive landscape. Now, I did take a look at their financials, and they are losing money. They aren't creating any revenue, and their expenses is increasing as they're getting closer to potentially getting their FDA approval. So I would say that that is the biggest catalyst. They have enough cash flow to last them about another year, which by then they should have FDA approval, and that's where they would then start to begin generating more money. And they actually announced a closing of $76.5 million in registered direct offering priced at the market under NASDAQ rules. So we can see here a specialty pharmaceutical company focused on developing and commercializing critical care drug products today announced that it has closed its previously announced sale of an aggregate of 50 million roughly shares of its common stock, accompanying warrants to purchase up to an aggregate of 25 million roughly shares of its common stock at a purchase price of $1.50 roughly per share, and accompanying warrants in a registered direct offering priced at the market under NASDAQ rules. And I would say that this is a very bullish thing that could happen to this company, and it sets a very strong support at the $1.50 mark per share for this company. And just about a month ago, they did announce a $20 million private placement priced at the market. So if you are scared of the shares possibly being diluted, I would say that the outstanding shares that it has, because there was a direct offering, the shares are now locked up with institutions, so the float remains the same. Not to mention that there's over 12 million shares owned by insiders. So that's roughly about 20% of the company, or here we can see the exact number, 17%, and it's insider shares 12.3 million. So when you combined the insider shares with the institutional shares, and if we look at some of the other institutes that own shares in the company, we can see that Vanguard owns over 700,000 shares, Hightower Advisors own over 100,000, and you can read the rest of them and see how it looks. So when you combine these two things, the institutional shares owned and the insider shares owned, we can kind of estimate that the share flow of this company is about 35 to 40 million shares, or maybe a little bit more or less. So that's actually a very low share flow. Any amount of catalyst that this company is to get would be very bullish for the company. Now here's some quick technical analysis for CTXR, some key levels that you should be watching. I personally put support at 210. It's just a key level, a psychological number of 210, not to mention that it bounced off of there multiple times, and it's a strong buy in my opinion under 185. It was key support over here. And then actually once it did dip today under 185 because the entire market was selling off, it was quickly bought right back up. We can see on the RSI it was oversold, and the MACD it also crossed and just went right back up, and then it held its place at above 210. It teetered right around it. It was actually just bouncing off of it, so that's the new area of support. And I could see this downtrending level of resistance here, and after hours today it actually broke out of it. So I'm actually expecting to be very bullish, but of course if the market opens red, this penny stock could open up red as well. But it's been doing really well in the sense that when the entire market is red, this penny stock remains green, ever so slightly, but still green. And then after hours, it gets more action. I believe that if right now the market was a little bit more bullish, the stock would continue to uptrend a lot higher. I personally believe that by maybe the end of this month or the next month, it should be at about $3, and hopefully it can continue to run from there. Let's say you buy 100 shares at $2 per share. That's going to cost you $200. That's going to be your initial investment. Let's say the stock goes up to $20. So the returned amount would be $2,000. So that would be a gain of $1,800 or an ROI of 900%. So it's close enough to 1,000. Okay, now these companies, along with every company traded in the stock market, will go up and down. It's how the market works. But if you've done your own research and believe in the company long term, then you can invest. Don't buy some shares and on the first dip panic sell. And that is how you lose money in the stock market. You need to be patient and believe in the company you've invested in and allow them to grow and expand, and then you as an investor can reap the reward. If you are unsure about your investments, you should possibly consider taking some profits or reducing your investment size. But anyways guys, I'm not a financial advisor. Invest according to your own personal risk tolerance and be sure to preserve your capital. Let me know what you guys think of this company and what your plan is in the comments down below, as well as ask questions. Also be sure to like and subscribe to support the channel and to show me that you like this type of content, and if you do, then be sure to expect more. But that's been it for me guys. Peace.